Good morning. I warmly welcome you to the financial accounting class. Today we are learning about the non-profit organization accounting treatment. Profit organization or non-trading organization. What is non-profit organization? There are certain organizations which are formed not to earn profits but to render services to the members and to the public. Such organizations are clubs, hospitals, libraries, colleges, charitable or religious institutions, literary societies, etc. These non-profit seeking entities exist with the primary motive of providing services only. Services such as a club provides sports and recreational facilities, a hospital renders medical services, a literary society promotes art and culture, and an association may also be formed to protect the rights of its members. Though the main source of income of such organization is membership subscriptions, donations and grants, etc. They may also undertake trading activities in order to earn some profit, which is also used for the furtherance of the goals of the organization. As the main aim of these organizations is not to earn profits, they do not prepare trading and profit and loss account, but still they would like to know whether their current incomes are sufficient to meet their current expenses. For this purpose, they prepare an income and expenditure account which is similar to a profit and loss account of profit seeking entity. A balance sheet is also prepared in order to show the financial position of the non-profit organization. Then we can learn about the final accounts of non-profit organization. Non-profit organizations also prepare their final account more or less on the lines of the profit-seeking organizations, which include the following statements. First one is the receipt and payments account, the income and expenditure account, and the balance sheet. The receipts and payments account. Receipts and payments account is a mere summary of transactions appearing in cash book. According to William Pickles, receipts and payments account is nothing more than a summary of the cash book, that is cash and bank transactions, over a certain period, analyzed and classified under suitable headings. As such, receipts and payments account is prepared at the end of the year from cash book. Special features of receipts and payments account. Special features of receipts and payments account. It's a real account, and hence the rule of real account, that is debit what comes in and credit what goes out, is followed while preparing it. Second feature is it starts with opening balance of cash in hand and cash at bank. Cash in hand always shows the debit balance and will therefore be written on its debit side. Cash at bank may show a debit or favorable balance, in which case it will be written on its debit side. In case it is an overdraft or unfavorable, it will be placed on the credit side. Likewise, it is balanced at the end of the year by entering the closing balance of the cash in hand and the cash at bank. All cash receipts are shown on the debit irrespective of their nature, whether the capital nature or the revenue nature, and of the period previous year, current year or next year. Likewise, all cash payments are shown on its credit side irrespective of their nature and relation to the previous, current or next year. Only the actual receipts and payments of cash is recorded. Non-cash items such as depreciation, outstanding expenses and accrued incomes are ignored. This account does not tell us whether the current incomes exceed the current expenditure or the current expenditure exceeds the current incomes. This is the format of receipts and payments account. In the debit side, receipts and the amount column, credit side, payments and the amount column. This is the example of the receipts and payments account. In the receipt side, balance brought down, that means cash balance opening. Then to annual subscription, to life membership fees, to entrance fees, to interest on securities, to sundry receipts. In the payment side, by general expenses, by salaries and wages, by furniture, by rent, rates and taxes, by printing and stationery, by repairs, by balance carried down. That means cash closing balance. Then the next one is income and expenditure account. Income and expenditure account is similar to profit and loss account of a profit-seeking entity and is prepared to ascertain whether the current incomes are in excess of current expenditure or vice versa, or it reveals the surplus or deficit arising out of the organization's activities during a particular period of time. It is provided in the same manner as profit and loss account, and the end product will show the surplus or deficit. The special features of income and expenditure account. It is a nominal account, and hence the rule of nominal account, that is, debit all expenses or losses and credit all income and gains, is followed while preparing it. No opening and closing balance of cash and bank are recorded in it. This account is prepared in the same manner in which a profit and loss account is prepared. As such, all adjustments relating to current year, such as depreciation, outstanding expenses, prepaid expenses and income, etc., are taken into consideration while preparing it. Only items of revenue nature are recorded in it. All capital nature items are ignored. This is the example of income and expenditure account. Nursing Society income and expenditure account. The debit side, all the expenditures. From first one, the salaries of nurses, board, laundry and domestic help, to rent, rates and taxes, to car expenses, to drugs and incidental expenses, to outstanding expenses. Then credit side, includes all the incomes. By subscriptions, less wrong inclusion. By fees from non-members. By municipal grant. By interest. By deficit. Difference between the receipts and payments account and the income and expenditure account. First, on the basis of nature, receipts and payments accounts is a summary of cash flow, and the income and expenditure account is like a profit and loss account of profit seeking entity. On the basis of size, receipts and payments account debits a records receipts, credits a records payments. In the income and expenditure account, debit side is expenses and on the credit side, income and gains. Then on the basis of types of account, receipts and payments account is a real account. The income and expenditure account is a nominal account. On the basis of opening balance, receipts and payments account starts with opening balance of cash and bank. The income and expenditure account, it has no opening balances. On the basis of closing balance, receipts and payments account closing has in cash at bank or overdraft at bank. Then the income and expenditure indicates either surplus or deficit. On the basis of capital and revenue items, receipts and payments account records receipts and payments of both items. In income and expenditure account, income and expenditure of only revenue nature. On the basis of period of income and expenses, under the receipts and payments account, all receipts and payments irrespective of the period. Under the income and expenditure account, all the incomes and expenditures of the current year only. Then on the basis of balance sheet, receipts and payments account, no need as all items are included. The income and expenditure account, it's a must for remaining capital items. Okay students, in the next class we are discussing about the balance sheet. Thank you.